and I think that's great. So I've got the mute button on. If you need anything, just use the chat function and try to catch our attention there, or send me a text, and we'll try to get any questions you have addressed. All right, so obviously the markets are down this week. We came back in after the holiday, and what looked like we were going to break out to new highs and really start a big leg higher on Sunday night turned out to be a big disappointment, and selling started emerging really about 8:30 Monday morning after being up all night long, and the selling's been pretty relentless since then. Volumes have been moderate. I wouldn't say they've been really high, but we've definitely I think by all charting accounts have at least a short-term top in place. But before we jump to the charts, fundamentally what's happened is really nothing. We went into the holiday with the bull being fed every single day, right? You had export sales announcements, you had really dry weather, you had all over the world. So you had all the necessary things for the bull market to really continue. And then on Friday, it's like somebody flicked a switch, and all of those bullish catalysts, people just stopped talking about them. And then so you've got a little bit of shift in South America, where it's a little bit wetter. So you've got some guys talking about, oh, well, maybe the crop won't be so bad. But the weather forecasts that I'm looking at, and a lot of you share weather forecasts with me from your weather guy, and so just kind of reading all of those and looking at them, the weather forecasts that we're looking at, and for the best we can tell, is that yes, there's some rain relief, but the general pattern of La Nina in South America is persisting. So that should imply that we stay a little bit drier and a little bit hotter than maybe the crops would like. So we're not saying that South American crop is going to be just a total failure and that they're not going to grow any bushels, but the top end yield has probably been impacted some. But the next 30, 60 days are gonna tell us everything that we need to know there. So kind of from a macro side of things, let's go through the list. The La Nina pattern is still persisting. It's still pretty dry. We know that the first corn crop in South America is not going to be great. It's not going to be a train wreck, but it's not going to be great. The beans got in very late, and they're in they're under some stress, which if we get a lot of moisture, if it turns wet, then that could actually be beneficial to them. If it stays dry, then they could be in trouble. So we got some time to develop there. And then there's safrinha corn crop, which comes after these beans are harvested, will probably be in the ground late. So you got a lot of as they would say in a game, right? You got a lot of time left on the clock to figure out what's going to happen in South America, and I don't think anybody can accurately predict it. So we just have to let it play out. But the one thing that really strikes out to me as reading through all the fundamental news is that the U.S. corn is the cheapest in the world. We're well below, and we're super competitive with everybody else, and the U.S. dollar is breaking. So the dollar below 92 with this current setup ought to be underpinned strength for the ag markets moving forward. You should see energy and you should see agriculture benefit from that weaker dollar. All right, so enough of that. Let's look at what the charts are telling us. So this is March corn, and as you can see, we've been down the last 3 days. We've got this big outside engulfing bar, a massive key reversal, massive engulfing bar, whatever you want to call it. We broke out to new highs. We turned around. We took out the prior day's low and closed below the prior day's open, right at the prior day's low, and below this close here too. So that was a bearish day, certainly on Monday, and then the selling has just continued through. Bigger picture, what we're looking at here is a buying opportunity in corn, in my opinion. If you look at these wave counts, if you look at waves, we tend to move in 5 waves up, and we have not completed a 5th wave up yet, according to this indicator. Now I'm going to add a couple more things to it to help validate that, okay? First of all, these oscillators down here are now below their 0 lines. In an uptrend, when your oscillators are below a 0 line, that's telling you to look for buying opportunities. So we're into that buy zone now, from an oscillator standpoint. Now, our primary trend indicator is our Ichimoku Cloud, right? Which, when I overlay here, is we're coming down into the sweet spot where corn ought to be looked at to be bought. So anytime corn is above this cloud, we're inherently bullish. Anytime we're below this cloud, we're inherently bearish. And when you look at these together, what this is telling us is that corn's got a lot more time and got a lot of things underpinning it that would tell us that this ought to be bought down into here. So from a marketing standpoint for new crop corn coming in the next year, I wouldn't touch it. I would not do anything. If you were really nervous and you really wanted to set a floor, you can buy an at the money put for or slightly out of the money for between 20 and 25 cents, and you can set a floor which would put you, let me pull up December corn here. There it is. If you can buy an at the money put, which would put a floor right about 390, between 385 and 390, and you can just leave your upside open and keep yourself open on cash. You know, if somebody's really, really nervous and they wanted to do that, they could. I don't see a strong reason to do that with this setup here that we have, because we know that we haven't finished a wave 5 yet. We know that we're above our cloud, and we know that we're holding major support. So I really wouldn't start to get nervous unless the March corn came back in and traded below this high right here, which is down all the way down at 388. So anything from 388 up to about where we are, I would expect that to be a buying opportunity. Now, I don't think necessarily today's the day, because I think that if this is the end of wave 3, I think that wave 4 is going to last a little bit of time. I don't think it's just going to hit on one day and move on up higher. It certainly could, but I don't think so. I think we're going to chop sideways, maybe even grind a little bit lower before we move up. So I think we got some time, and I think but I think the important thing on corn is not to panic. I think you just got the funds coming out of the holiday, and it's the first of the month. You know, they're trying to square up their books. They're looking at what the best opportunity is. Maybe they're a little longer than they want to be, and maybe they want to book some profits. But big picture, fundamentally, I just don't see what's changed enough to really cause the corn market to reverse course and, you know, come all the way back down to 350 or $3, you know, for that matter. I think it's going to be much better bid than that. And if we do test $4, then I think we're going to get really, really antsy to want to own it at that level. So corn, sad to see it, sad to see wave 3 end, but excited to see what comes next. All right, let's look at beans. Beans are off almost 60 cents from their high on Sunday night. Again, like corn, they didn't break out to new highs, but they sure looked Sunday night like we were just going to explode on up higher and go to, you know, $12.50 or even $13. But the market gods said, no, this is going to be a ceiling for now, and we're going to back up the bus and try to and maybe try to get a better running start at it. Like corn, look at this setup. We've got we've got a pullback in an uptrend, right? We're finishing a third wave up. We've got a potential fourth wave beginning, but it hadn't started yet, and you're above the cloud line. So I don't see any reason to get overly nervous here and assume that we're going to come all the way back down and retrace this whole move. I think beans are setting up for a buying opportunity. Like corn, the balance sheet is really, really tight, and there's a lot of unknown left. And the job of a futures market is to discount unknown risk. And coming into our growing season, we have no clue what our crop looks like next year. So to think that we're going to break it down and price in a much larger carryout in December, I think is a really silly bet. I think the only guys selling this are guys that saw it miss 12 several times, and then they saw the volume pick up when this low was broken, so they've piled on it. I think it's purely speculative, some long liquidations, and but not anything that's changed from a macro perspective. Again, like corn, our oscillators are now down below the zero lines, which is telling us to be looking for buying opportunities. So we're looking for beans to complete a wave 4, mark enough time, trade these oscillators into the zero line, and then own it as it moves back up through it. I think this is going to set up to be a terrific opportunity, and I don't know what's going to cause it to move back higher, but you'll see a change in the news flow about the second day after it starts to rally. You'll see the news headlines start to justify it, just like we saw bearish headlines start to come in on Monday afternoon. So stay tuned, stay patient. I wouldn't do anything with new crop yet. I just sit and wait because I think we got way too much time before we have to jump off and do anything. All right, that's beans. I was going to show you the weekly chart on beans. Weekly chart on beans, we've been talking about this. We talked about this for a long time. This move from the low up looks very similar to the low back here in 16 and very similar to this move. We've now basically completed it, and so it makes sense that we might bang our head against the ceiling and retreat just a little bit. The difference between this move and this move is that this one has never gotten as overbought and extended as it did back here. And the reason I think is that we've just been waiting on confirmation that our carryout is really going to be as tight as it is. And once we do confirm that we're looking at a much tighter carryout moving forward, then I think beans have got to go higher. I've read a lot of articles that talked about how the current bean price is not yet rationing demand. We've still got extremely strong crush numbers. We've got good export numbers, and we're competitive with world values. So I don't see how it's going to break a lot further and get really bearish with the dollar where it is and with our current setup. Everything about this market feels like this pullback is really a buying opportunity. And certainly if we're fortunate enough to get all the way back down to this 1050 area right in here, then I think that's definitely a place to take a shot at it. Otherwise, we want to wait for the daily chart to work its time, to mark its wave 4, and then turn. And you want to buy that turn when it materializes. All right, let's look at Kansas City wheat. Kansas City is the furthest along in its wave 4. All 3 of the major grains are tracing wave 4s, and this one's the furthest along because it's been trading pretty severe whipsaw action here for the last month and a half. And but we've maintained the same structure, right? The oscillators are below the zero lines. You've got a completed wave 4, and you've got and you're still on top of this or inside or above the cloud. anything above this is still bullish. So we're into this zone where we would expect wheat to start to find a bid relatively soon. Now, if corn continues to break and implodes because we turn off ethanol and all that stuff happens, then we're gonna have then we're gonna get a headache trading wheat because it's just gonna follow them. But otherwise, you look at the global landscape for wheat, and there's not a huge reason to turn around and sell it. Um, it feels and looks like wheat is actually the leader in the grain complex rather than just the follower. And that's because this wave count is so much more mature than it is in corn and beans. So we'll see what happens over the next 30 to 60 days. But we're actually looking up. We're looking to re-own stuff that's been sold, and we're looking to wait to market any new crop stuff until we get another push higher and ultimately break out to new highs. And short of a shutdown, I think that's just where you want to sit until something else materializes that breaks it. So that's what I've got for you today, guys. I think it's patience. Use this for what it is, which is I think an opportunity to buy. And from new crop perspective, stay very, very patient because we got a lot of time to go. All right. And last but not least, there is risk in trading futures and options. Don't do things that you can't afford to do, and recognize that no individual is in control of the market, and it can do what it wants. So it's certainly a risky business. If you need help, please call us. We are more than happy to talk through and structure things that are specific to your farm if you need it. Have a great day, and we'll talk to you next week.